Okay, so this week we are going to talk about forecasting, and let's start with number one thing, which is discussion. How to get the data from the website. There are all websites that you can pull the data from there, and that is free data. Like Bloomberg is there, uh, uh, Wall Street Journal they have also, but many websites. But I always use Yahoo Finance. So for example, I just go here and let's say I want to uh, see Amazon data. Amazon data. And here I can see, can you, hope you are able to see my screen on Yahoo Finance. And this is my today's, here you can see 10 weeks, 9 months. And here you can look into historical data. And can you see? So this is the data, and here is the option to download. And you can also select the range. So basically, longer is the data, better is the trend. So if you have long enough data from, let's say, from last the day Amazon started trading, from that date till now, you can. So here, for example, you can start from max. So max data is from 97. Hope you can see my screen properly. Okay. So here you look, this is the today's data. Now I'm going to download, for example. So this is the downloaded one. And so basically it starts from 97. I'm not able to make. So it has all the data from beginning till now. So this is how I get data, and you can use any stock. You can use any index like Dow Jones index, like different Japanese index, Dow Jones, Nifty, and Indian index like Sensex. So all the indexes, everything you can download also you can. But only one thing which I'm using here, I'm logged in into Yahoo. So probably you cannot download it from outside, but you have to log in, because I did not try downloading without login. So I'm logged in and I'm able to easy download and easily use in Excel, or you easily Excel can be transported into Minitab. So this is the download part of the, and now based on that, you have to discuss what is the future of this. And there are two companies, if you know, one is uh, Raw, I forgot. Two companies, they manage almost $10 trillion of assets, and one is Rock and one is Stone. What is the name? Stone and Rock, and their first name is
The Black Rock.
Yeah, BlackRock and Blackstone. Yeah. Oh, sorry. Thank you. So yeah, these are the two companies. One is I think Blackstone or BlackRock that own almost 8 to 10 trillion dollars of assets, and how they do investment analysis, how they invest in the different stocks. Similarly, one of the biggest investor in US or world history is Warren Buffett, and he owns the stocks or he owns the equity almost in all big companies in the world. So you can understand a lot of things. So discussion is about, there are two I think, let me see exactly, and then I can. So just a minute. Yeah, so this is, actually first is about food delivery company. So actually forecasting can be many things. It can be using numbers. It can be using also Delphi. Delphi is a method to do the forecasting and to predict future aspect, and that can be done using experts' opinion. So first thing is about different eating company like delivery companies. Uh, they are not profitable companies. Despite that, they are increasing. They are growing. They are having good market. Everyone knows about them, but they are not making money. If they are not making money, what is the future? What do you see the future about them? How they can, why they are surviving, and how they will make, what is their future? So basically, this is what first thing, that you have to use your own experience, understanding, and you have to uh, make your points. And the second thing is about, you have, let's say, $100,000. Many things are happening in the world as of now, like recently, uh, Russia Ukraine war, high inflation rate, energy prices, and recently Israel Hamas war, and everywhere around the world there are little bit political and other things are happening. So these are all environmental factors, and considering everything, where you want to invest your $100,000 for X, 5 years time period, where you will get the best return or best money, best value of your money. So basically, which stock you would like to invest, or combination of stocks, like I would like to, out of 100,000, I would like to put 10,000 in one stock, 10,000 in second, 10,000 in commodity, 10,000. So basically, you can analyze all of them here. You can also find the commodity rates. You can also, like, gold is increasing so much. In whenever you see instability, when you see some turbulent in the business environment, the commodity prices always increase, particularly gold and silver and platinum, and two three lithium ion. Lithium is increasing. So basically, that's all up to you. You do systematic analysis where you want to do and how to put your money to get the best value of your money. So these are the two discussion points. Do you have any question related to discussion?
Hi, yeah, I have a question about the data for the food delivery. I was just wondering what type of data you're looking for. It's obviously not the stock price, but more of like the loss of net income. So where should we get data for that that's
Yeah, so many things, you can see, like there are some CNBC reports, something, uh, they gives the summary about that, that year after year, DoorDash is losing this much money. This, they are pouring this much money year after year into the business, but they are not getting, return out of that. For example, one industry that you always know, always hear about. Everyone else make the money in that industry, but the aviation industry or airlines industry don't make the money. If you look around the world, only few airlines are profitable, rest airlines are not. Everyone else, like, the airports, like, the duty free shops, like whoever is the whoever is working in aviation industry, everyone is making money. But why airlines, almost all airlines, they are barely making little profit or they are making losses? So basically, similarly, this, this food delivery companies, I study about this, and I find only one company in food delivery which is based in China is making marginal profit, or like, let's say, only fraction of the, yeah, I'm fraction of that, profit. And y- so basically, you just Google and you just find, or you can give your own opinion. So first thing about is your opinion. If you can find some numbers, fine. But second is number based. You have to come up with some numbers based on the data that is available on different financial websites. Yes, Tracy and Marcus.
Okay, so in terms of what type of numbers we're looking, like it says to use the obviously the Excel data. I'm just not sure how to get a large volume of data that we can analyze for the food delivery. Do you have any tips on where to look specifically for that?
So basically, for example, food delivery company is, let's say, I'm going to,
Could I just add on to that question, since you're looking up for the food delivery part one? I thought that the part one of the discussion was just on expert opinion and not necessarily data analysis, and number two was more of data analysis.
yes, exactly, that's correct. First is about Delphi, like I said, Delphi. So you can,
Okay.
it's about your opinion, why this is happening. What do you think? What could be the issue and what is the future? So Delphi is the technique in forecasting that helps where you don't have the numbers, where you don't have the data, and but you have the understanding, you have the gut feeling, you have the experience in the industry. You come and sit together and you predict and you forecast the future about that. So that technique, so first question is about that technique, means, your opinion. Second is about pure numbers, using numbers from financial website to come up. And but you can always get the data about, all the companies. If you look into yearly earning, and I see all in is negative, negative, negative. So
I was gonna add that you can actually go onto Yahoo Finance and you can look at the company's 10K and you can look at their income through that way, and you can look at it year over year on Yahoo Finance.
okay,
Because Yahoo Finance has their 10Ks and the 10Qs, and it'll give you all the financial sheets that you need for that information.
so what do I need to type here?
Type in any like Coca-Cola or any company that's publicly traded.
Okay.
Can't remember what Coke's ticker symbol
Okay.
is. I think just I think if you just
Okay. Yeah. A Dudas
there
is,
it is right there.
okay, here.
Without the yeah, it should be any.
Yeah, so first question is about, you can use your gut feeling, your qualitative forecasting. So there is a qualitative forecasting based on Delphi and
Yep. If you
yeah, go ahead.
look under no, you have it right there. If you look underneath financials, that tab financials, you scroll up a little bit. Nope, not that one. It's scroll up on where like kind think scroll down a little bit. I think you right there where it says financial. Oh, you
Okay,
just passed it. Let's see. It should a little bit up, a little bit more. It should show right there, financials. That tab right there, I believe.
thank
And if
you.
you scroll down,
Okay, yeah, you can see.
it'll give you your revenue, net
Yeah.
income. It'll give you all sorts of information, and you can go back pretty much as far as you want.
Yeah, thank you so much. Who is this? I can't see the name. Thank you so much. Yeah, for sharing. So basically nowadays we have almost everything on our fingertips.
Yeah, because they're required by law to report all this, and that's the breakdown. You can look on. There's a couple. You can use other websites other than Yahoo Finance, but there's a couple of different websites you can use to get all this information.
Yes. Yeah, you can also use like Bloomberg's and other. They report all the data, all the information related to finance and the health and other things. And yeah, so you can get this. Is it okay? I have to check the questions in the chat. Yeah, basically, Julie, I mean, I signed in and I get this data very much. So basically, if you sign in Yahoo, you can get the data.
I was just saying you don't actually have to be signed in for those that don't have a Yahoo profile. You can download it without being signed in.
Oh, that's good then. Yeah, perfect. Okay. So this is, very much simple. And so this is discussion. Now let's move to the trend forecasting because that is important. So let's say I started here. So basically, in one question, I have given this data sheet and I ask about IBM. But when you see, you will see that Amazon is coming. The IBM data is in the next sheet. So don't do Amazon, but look into the data. So sometimes little bit. So one question came, they don't see the IBM data. IBM data is here. Now let's look. This is my data, old data that I downloaded from Yahoo, and I'm going to import in Minitab. I'm just copying and pasting. It's about 1800 some points. Something is. Okay, I think I did. My Windows Office is expired, so I'm not able to do. Okay, I got the Amazon data right here in my mini tab. So usually, let's say I have $10,000 or $100,000 in my pocket. And I will buy today. I will buy today at highest price, for example. So what is the last day that I can see in my data? So last day, let's say I buy at highest price. So how many stocks I can buy divided by 180.14. So roughly I will get roughly I will get 100,000 divided by 180.14. That means I will get almost 555 stocks. So 555.12 stocks I can get today. Now I have 1 year time to invest this money. What I will get at the end of 1 year? Sorry. How much money I will get in return? So 555, let's say I buy today at highest price. So basically, if you have this data, this is, if you have large amount of data, we normally do the trend forecasting. So here, look in under statistics. And under statistics, we have time series. This is time series data. So if you know cross-section time series, and here we have trend analysis. Now trend analysis, actually these are the typical 4 trends, linear, quadratic, exponential, S-curve. And so you need to select which variable has to be forecasted. Let's say we are consistently using high. Let's say I go high. Let's say you buy at highest price and you sell it at lowest price. Technically you have to assume that much, but we are just consistently working on high. So if you choose high, use high only. Now I have to see. So generate forecast number of. So by default, next 365 days. So basically it is counting next 365 days. It is not counting, Sundays, Saturdays, holidays, the day when stock market is not working or it's closed. So basically just numerical value 365 days, and I consider that 1 year. And here you can, and there's a stamp option. And here I just put date under stamp, and that's it. And I selected very first linear. So I have to compare all 4 options which one is going to be the best fit, which is going to be best trend. So this is linear. I have just done linear. Then we will do the comparative analysis of all of them. So the last one, we have 6,744. And here we have the next forecasting. So next 365 forecasting. So $180 stock becomes how much? 115 means you are losing money. And you can see this is the trend. So this trend doesn't fit. Why? We will discuss later. So now I go for next one. And now here I just choose another one, exponential, and I do OK. And you can see, and $180 become $275 in a year. The third thing I just do, I quadratic. And fourth one I do S-curve. So we have these four trends, and I have done one by one all of them. Now you have to see which one is going to be the best one. So let's see how you can first you see this is trend analysis for S-curve, and I think this is coming clear line, and I don't think this is going to be the valuable. So just look into this one. This is quadratic, and you look into this also looks okay. How you can see which one is the best one? And $180 here becomes $189. And now look into this. How do we see which trend is better? So basically you see the trend where it is going. This is actual, the blue, and this red one is forecasted one or overall fit. This is going in this direction. You clearly see this is going in this direction, where this looks like, somewhere here or something. So this gap, higher is the gap between actual and trend. If you see, higher is the gap between this, that is not good for forecasting. So basically out of 4, we need to see which one is having a small gap. And that these measures are for that. MAP, MAD, MSD. Look into this and look into this. So this you can see this, if you look into this, this is also going in this direction, and the trend is also going into this direction. So out of four, so you can see this is perfectly fitting, this line is perfectly fitting with actual trend and heading this. So out of 4 trends, this is higher, this doesn't exist. This has the very first linear one, look into this. These values are higher and they have, so basically exponential trend is the best trend analysis for this. So exponential is the best. Now, what is the value you get at the end of the 365? 275. So how many stocks we got? We got 255. Sorry, 555. Now, this is the value of your stock. So into 275. Sorry, I did something. So let's say 555.12 into 275.739. Okay. So you invested $100,000, 100K, basically what you are getting, 153,000. So basically about 50,000, 53,000 profit. So this is a simple technical analysis. You can use for any stock that you would like to prefer, but keep the, for assignment, if high is given, use the high only, because every day there's a opening value, there is a maximum value of the day, there is a low value, and at the time of closing there is a closing time value. So all values are there. You need to stick only on high. So this is trend analysis. Any question related to this? Because all the questions in the fill in the blanks are related to this.
You pointed out the numbers in that graph. So are those more accurate because they're lower?
Yes. Yeah. So basically, this is okay. Just yeah, lower. The difference between this is actual, and this is the best fit, which is very close to the actual number. So very close means lower the values of these accuracy measures. And if this is small, then yes, better.
Great, thank you.
You're welcome. Sorry. Yes, and you can, by looking into the plot, you can clearly see this plot is almost overlapped on actual data. See, at the beginning, it is clearly on the, so this is very clear in the recent, the direction of this forecasted or trend is almost going in the same direction of the actual data. So you can see this is the best as compared to this, because here you can see the direction. Second option in this is this. I think this is quadratic trend model. And this is the second option. Linear is not one, because this is going somewhere and this is very straightforward. And the S curve is not at all feasible because it is giving negative value. So usually, I don't know, but this gives also S curve. Yeah, this is not at all feasible. Yes, Tracy.
Oh, thank you. I just wanted to clarify in the fill in the blank, the different questions ask for the profit, the stock price, or the return on investment. And I just wanted to clarify whether the profit and return on investment mean the same thing.
Yeah. So basically, the return on investment, it's a financial term. I have to make it clear. I will correct that, only profit or loss. So return on investment and profit or loss. So if
From
you
your
get,
initial investment, like you just showed us.
yeah, if
Yeah,
it is,
okay.
let's say you are losing money, then you have to enter the value in minus $500, minus $400. So basically, whatever value you have in loss, you have to put minus sign before entering the number.
Okay, and then last question for the stock price at the end of the amount of days of the investment. Is that what you showed us where the data forecasts the stock price per day? And at the end, so we put in 365 days. So that last value is the value on the 365th day.
Yes, yes,
Okay.
the last value on 360. But
Okay.
if you do real technical thing, this is not 365 days, because out of 1 year, how many days stocks market open?
Yeah, I know that there's a formula to take out those days, but using Minitab, then
Yeah,
we would just identify it there
yeah,
on the chart, right?
we are just learning numbers, and
Yeah.
but if you do real thing, that
Mhm.
how many days you take off and how to do
Yeah.
that's I'm not going into that. So
Okay.
very
Okay.
simple.
Just using Minitab. Okay. Thank you so much.
And based on that, how the Dow Jones index and other indexes are formed, I would like to clearly make it. So basically, I mean, based on that, you can determine the just a minute, let me pull the my okay, so here so this is Dow Jones Industrial Average, and so basically you can see these are the companies contributing into Dow Jones Index, and this is their index weight. So for example, 3M is 1.454, American Express is 3.64, and you can see a Caterpillar, and there's a Dow, there's a, and you will be surprised to know that most of the, this is largely controlled. I'm not making any statement, largely controlled by Berkshire Hathaway, because Warren Buffett is owning, and that Blackstone or BlackRock, they owned almost in every, like, few companies like Visa, American Express, Bank of America, 7%. So if you look the portfolio of Berkshire Hathaway or Warren Buffett, you will see everywhere in each company they have like 4%, 3%, 6%, 5%. Home Depot is and Goldman Sachs, they are the largest contributor in this. How do you do this analysis? Like recently, NVIDIA is there. NVIDIA not there, because that is $1 trillion company. Visa, NVIDIA, no, not yet. Okay, so basically this is the and this total is 100%. So how do they do it? So basically, the day they incorporate, let's say I have 4 companies, for very simple calculation, and I would like to form my own index. So, and today, let's say I make this BADM 520 index, and I choose only tech company. So Meta, Google, NVIDIA, and let's say one more, which is Amazon. Okay, I assign the weight for each of them. Like Amazon is 20%, NVIDIA is 30%, Google is 35%, and what is the left to 15% is this. And this total is 100%. Now, so point 2, this is Amazon. Amazon stock today divided by Amazon at very first day when I incorporated in my first day. Similarly, plus point 0.3 NVIDIA today divided by first day. So this is how, if I do all of them, I can get the values. For example, here, when this was incorporated in, it gives you the day of incorporation, day added. So 3M, when it was added, 1976. So in 1976, when this was added, what was the price of 3M stock and what is the current price? So, and multiplied by 1.54. Similarly, American Express 82, what is the current price? On this day, what was the price? Keep doing all of them, and this decide the today's Dow Jones index. So if Dow Jones index today is, let's say, where's Dow Jones? Yeah, 38,000, this is the value. How this value is coming? This value is coming based on, they also remove few companies, they incorporate few companies. So I think NVIDIA is not there. Probably very soon you will see NVIDIA in here. So this is how they decide. And you see, mostly I can show you the portfolio so that you can know how things are controlled. And you can see, so basically you can see they have the investment in almost every company. So if you do the research, you will find from Visa to Bank of America to Goldman Sachs to everywhere, they have the money. So this is also covered in the chapter. So and one more thing I would like to share, how they determine what is the price, how the stock prices fluctuate here. Let's say, it is trending this, because, what is the current buy or sell, based on that, your stock prices fluctuate in a day. So what is the opening price? What is the closing price? At that particular point, if you see the Amazon price is $205, because that recent transaction happened on $205. Therefore, that price is reflecting. So this is about this week lecture. If you have any question, feel free to ask.
How do we do the exponential smoothing in Minitab?
Okay, so Minitab, you can do all those things, but in trend analysis, basically, those are not valuable things. Why? Because you can see, I'm just going to do trend analysis. Those are for small data points, like seasonal analysis. So basically smoothing, moving average, all that is just very simple thing. And I think we don't have any in exam, and we don't have in assignment, because that is very simple. So let me remove this one. Okay. So we have the data right here.
So
Okay.
you're saying that in the, we just need to focus on the linear and the
And
three trending.
trend analysis. Trend analysis is important because, nowadays data is about, data is like, accumulating everywhere in tons of data. So basically you have to do trend analysis. Let's say you do moving average. What is moving average? Nothing but last 4 or last 5 average of last 4 or last 5 or last 6 values. And if I do the moving average here, consistently the same value will come to n number of times. So let's see, for your question, to clear this question, and time series. And now here we have moving average. And I select where is the high. Again, same thing. I'm generate forecast for again same 365 days. And moving average length, let's say I take 5 moving average. Okay. And time I put stamp and I put date. So this is moving average. Now look into this. So I do 5 moving average and see forecasted value. Keep looking the numbers, the exact same number for next 365 days. And now, excuse me, and see the forecast is, saturated, like, stable, which is not happening. So basically, okay, if you have 12 months data, like seasonal sales, so January, February, March, April to December, now you want to see what would be the sale in January. So basically you take last 3 months average, November, December, October, but there's a seasonal factor that January is lowest business because winter and other factors. So that is very simple way to calculate, and people used to do in the past, but nowadays mostly they do based on this. So you can see if you put 180 or 100, if you put, for example, $177 on in Amazon, $180, basically it's $176 throughout the life. So this method is for 4 5 or for very small number, but not valuable for large amount of data. Is it making sense, TT?
Yep, got it. Thank you.
You're welcome.
So there's no questions on exponential smoothing?
Yeah, no question on exponential smoothing and trend and moving average, and there are other methods also. ARIMA is also there. And just one thing, because this is applied part. In real life, Kevin, we all experience, certainly we have all little bit here and there. We look for trend for everything.
Okay, so it's just focus on the trend forecast.
Yeah, just focus on, yes.
On linear, exponential, quadratic.
And S.
Yes.
Yes, sir. Yes, Tracy, please.
I have a question on, there was one question about the center moving average.
Mm-hmm.
And it looked like a really simple table. And then I went to the text and, tried to recalculate and learn from the text example.
Mm-hmm.
But it wasn't adding up for this for the question and the fill in the blank. Could you give an example of calculating the center moving average?
Yeah, just a minute. So let me pull the slides and just a minute. So like moving average is 3 moving 5, you can choose. And which question you are talking about? Center moving average? Which question?
Yes, the center moving average.
So which question in the, it
think
is
it's
in the,
fill in the blank.
okay, let me see what question.
Question number 6.
Okay, just a minute, I have to see.
I think you just add the time frames together and divide by the number of time frames.
Question 6. Okay, just
So because it's for the 4th period, I think we have to take the double moving average to get the resulting CMA. So I did the 2 averages of the 3 periods, but not coming out correctly. So I'm not sure.
1, 2, 3, 4, 5. Okay, is the 3-time period moving average for period number 4.
Yes.
So basically, you know, what is the center, you know, so period 4, you know, what is the center before that? You know, first is 22, second is 33, third is 27.
Yes. So I got the average of that. And then the next step was 33, 27, and 34. Get the average of that, and then get the double average of those 2 averages. Am I reading that correctly?
Who can explain this to Tracy?
I just added the 3rd, 4th, and 5th together and divided by 3 because of the 3 time frames that you're averaging. And I got the right answer doing that.
So you did 1, 2, 3, and then 2, 3, 4, and 3, 4, 5?
No, just because you're
Oh.
looking for the center being 4. So you take 3, 4, and 5 together and then divide by the number 3 because it's 3 that you're averaging out. And that should give you the right answer.
And that's it. Okay, so no double moving average. Maybe I went too far there.
This is, you know, center, you know, what is the center values? So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 numbers, what are the center values? And then, you know, if you are taking the average of 3, then divide by 3.
Okay.
If
I
you
guess
are
the text example is a little bit different, but maybe that's because it says if M is an odd number or an even number. I guess my next question would be M is 4. Would M equal 4 in this case? Where if it's a even number, you'd have to do the double moving average? Or is M 3?
So 3 period center moving average for period 4.
For M is 3. Okay. I think I read the formula incorrectly. All right. Thank you so much.
You're
That
welcome.
helps.
Yeah, we don't have any exam. I almost prepared the final exam. We don't have any. Most of the questions related to trend analysis. Any other question? If you don't have, then I would like to say wonderful night, and we will meet last time next week. And Tracy, you want to discuss anything so I can stop recording or anyone?
I
So-
had a question reading forward on the modules for module 6. I
Yeah.
didn't see any chapter assigned. I saw some readings assigned, but I didn't see any
Yeah,
text
yeah. So,
assigned.
module 6 is, it's a different and it doesn't have the book. So I'm just going
Okay.
to make few more notes, and when it will start, you will see some few, example, few notes and my lecture. And it is simple, very simple Excel average based calculation, but it is very important multi-criteria decision making.
Okay. Okay. Thank you so much.
You're welcome. Okay, bye.
Bye-bye. Thanks.
Yeah,
All right. Thank you.
if somebody I don't know whom I said, we can meet during class. So if somebody, I'm not sure.
What is your office hours, Raj?
Yeah, this is, I can meet, I can stop recording and we can, meet right now.
No, I'm just talking about during the week, for the rest of the week.
Yeah, so, I'm always available on, for replying email. So
Okay.
today is, I can, go as long as you want. I can, if
Oh,
you,
I don't have a specific question at this very time, but like later in the week, are you available by phone call?
yeah, so this is I'm available today. And,
Or
but
what about Thursday or Friday?
yeah, email, I'm always available, except I'm sleeping, eating, doing little bit activities. That's it.
Okay.
Could I ask a question then, since it's almost over, regarding the fill in the blank?
Uh-huh.
It's just a picture of a linear trend, and it's what is the approximate slope of the linear trend. And I don't know if this is more of an eyeball test, or is there a formula to calculate this?
So linear trend, there's a formula, basically.
Yeah, I
if you-
saw that there's a pretty complicated formula in the text to determine the slope.
I'm, basically, if you were in my 503 and now I'm not teaching any formula, this course is more about applied, because everyone cannot have that mathematical or, those formula equation kind of mindset, but everyone can relate with real things. So I'm not teaching, but, everything is having some formula. So I can, if you want, oh, sorry. I can show you some on the slides, and you can also
Okay.
see.
Yeah.
Let me stop recording because it can go longer video, so people will not like to watch. Stop.